everybody. Episode number 3 of Canadian Hustlers. Today we are here with Julie Brenneman from the Mortgage Center. She's owner and broker there. Welcome.
Thank you.
Yeah, so what is it you do?
I'm a mortgage broker with the Mortgage Center. So principal broker with approximately 9 offices around Ontario, as well as over 30 agents that work as brokers.
Cool.
So I'm a mom to a 14-year-old son.
Oh, so you're a working mom.
I am a working mom.
That's always busy, right?
Yeah, so it's just my son and I, and right now we're living in Woodstock.
Okay.
And that's where my main office is.
And you go to your main office mostly, or you go to office?
Yeah, well, I do some work with the other owners as well, and do some training.
Okay.
But and we try to have team meetings every couple weeks in whichever location suits. But it's primarily I would be working out of Woodstock.
Okay, and I know when we went for lunch there, I think it was 3-4 months ago.
Yep.
And you said you were going to do speaking events?
Yeah, so I do, just since February, I've been representing the Canadian mortgage industry, doing just training other agents at their conferences. So I've been going all over Canada doing that. So it's about a week a month that I would go to different provinces. So this weekend I'm off to Banff, and a couple weeks I'm in Nova Scotia.
It's almost like a vacation.
It's a tour. It's not a vacation. It's you're speaking all the time, but it's great because I've been able to meet a lot of really good connections, and it's like having a whole brokerage of like thousands of brokers in your back pocket if you have a question about something, or if you don't know where to place something. So
that's cool.
Yeah, it's super cool. So.
Nice. Another question about that as well. I was creeping your Facebook and it said you were emceeing an event there the other day too.
So I have I'm part of the Women in the Mortgage Industry.
Okay.
So it's a group of female brokers from across Canada, and they have events. Obviously, they have the conferences, and then they have other events that it's not just women that are invited, but it's primarily that Facebook group.
Yeah.
And so they had me speaking at a couple of those. So the speech that I did there was basically just about how I started my career and about being a mom and also being a career person. The one I present to the entire industry is about hiring an assistant.
Okay.
So basically I'm training other assistants on how to hire help so they can grow their business faster.
So what's the premise behind hiring an assistant?
Well, for me it was because I became a single mom.
Yeah.
And I was not having a lot of time with my son.
Okay.
And I found myself working a ton of hours and always being stressed out. So, but once I hired help, I was able to grow my business even more. So to the point where we have 3 assistants.
Oh, wow.
And I'm still, I still work a lot of hours, but I'm a lot happier because I don't have to, because there's always someone there that I can delegate to.
Yeah.
And be a little bit more
hands-on.
So
a little bit of stress relief.
Yeah, well, I got my life back, right?
Yeah.
Like I'm still very involved.
You can schedule your life more, your phone doesn't stop.
And you have all these people that can help, right?
Yeah.
Because you're not the only point of contact.
Yeah.
So, when it was just me, people were getting frustrated because there's only one of me.
Yeah, and you get back in time.
15 of them, right?
Yeah.
So this way we can have a really quick response, and if I'm not available to send something in, then there's, a couple other people that can do it for me.
Okay.
So they're always getting the service that they deserve instead of having to wait for me to come home from my son's baseball game or whatever.
To reply to it.
Yeah,
and
exactly.
You're a slave to your phone. I do notice that too, and I'm actually looking into getting a system myself a little bit. So because I wake up in the morning and it's like emails, messages,
exactly.
and I'm like, okay, let's get this out of the way, and then I start my day, and it's actually the wrong way to do it.
Right.
But you're supposed to, first start your day and then look at your phone, but it's just...
Yeah, well, I'm guilty of that too, right? Because we're all our business is one of our babies, right?
Yeah.
So, and we want to make sure everybody's happy, but at the end of the day, you either have your business or your family, but you can have both, right?
Yeah.
So, that's
it is hard to shuffle some days.
Yeah.
So,
for sure.
And being a single mom, that would be even harder.
Yeah.
I can't imagine being a single dad right now. That would be a lot of work.
Yeah, well, my son's older, so it's definitely a lot easier now. When he was younger, I did have a lot more help with my family, but he's very aware of what I do, and he's always been very involved in what I do.
That's cool. So he likes to support you then.
Nice to have the
support. It's nice to have the personal support group behind the scenes, right?
Yeah, for sure.
So
cool.
Why mortgage?
Why mortgages?
Yeah.
It's the only thing I was ever good at.
Okay.
I don't know. Don't put that on camera.
And you enjoy doing it.
Why mortgages? Because I like to help people. Like it's a really good thrill when you can get somebody their dream house, and that's why I do residential, because people get so excited and they are so enthusiastic. I love first time buyers because they don't know a lot about the process and they're always nervous, and then they're so excited once everything comes together.
Yeah, it's way more.
Yeah, it's very rewarding.
There's a lot of excitement in first time home buyers.
Yeah, I love
commercial is very boring then. It's just transaction, and
So what he does, he's running around with them all the time. With me, I just sit in an office and I sit and I figure it out, right? And I meet with them.
And then when that call comes in that it's finally through, it's always really exciting.
I meet with them once or twice, and then that's really all I have to do. Whereas you are running around all the time.
Run around, and there is a lot of learning with a first time home buyer.
Yeah.
There's a lot of teaching, and I talk to you guys a lot because they have so many financial questions that they just keep firing. I mean, and I don't know all the answers, but it's nice to have a good base of it. And then I send them on there, so then you're kind of aware of what's coming.
It's really good for you to that you send them to somebody else with those questions, just because a lot of people just go off the top of their head, or they Google and things change so often, right?
And it's so easy to get pre-qualified in 5 minutes.
Yeah.
I see all those advertisements, and it's
I know.
It's so horrible because it's not a representation of anything at all.
How's your credit?
How's your credit? It's good.
Yeah.
Is it really though?
Yeah. Do you really know?
Yeah. Because you told me that last time too, like Credit Karma and stuff like that.
Yeah.
It's a representation of it, but not a true representation.
Exactly. So it will show you some things. It may not show you all things. Even your bank apps that show you your credit score, they may be pulling from like a TransUnion instead of an Equifax, or vice versa. The score that lenders see is different than what you're going to see on those apps, or if you were to go directly to Equifax yourself.
I noticed that actually when I got my mortgage renewed.
It's going to be different. So, I mean, it's going to be similar, but there may be things on there that you might not be aware of. Like so I always told people if they're going to get pre-approved, like if they're planning in like 3 months, do it now, because if there's something that needs to be fixed,
we can fix it. Over 3
we've got
months,
time, because
right?
it's 5 to 10 business days, and we don't always have that when you want to put an offer in.
Yeah.
So, and we do help people with that too in our office, that fix things in the credit bureau, because we have direct numbers to Equifax.
Okay.
So if they have something that
if anybody want their credit fixed, or if they want to have a look at it, they should come talk to you.
And we can kind of get them. We have clients that we pre-approve 3 years before, or we work with them for a few years to get them where they need to be. So, and every 6 months they come back and apply again, and we pull it again and see what's going on, and eventually that's a really rewarding part.
Eventually when they finally get there, right?
Yeah,
and it's
when they actually do what you tell them to do. And
it's like me too. Like some clients, they just take more work.
Yeah.
But that's okay.
That's okay.
Because some clients go so easy.
Yeah.
That it just kind of makes up for it.
Well, it's good because you develop a relationship, right?
Yeah. And then if you make a client that takes a lot of work, if you make them happy, they tell everybody.
Absolutely.
Oh, yeah.
They tell everybody. The work you put in comes back.
Yeah, 1,000%.
It really does.
Yeah.
So
I think it's like that in any business, really. Yeah.
It's hard to get around all the credit cards and Equifax too, to get them on the line even. It's that's why we offer that to help with that, because we have direct lines. So we pay a fee to them every month to pull our credit reports for our clients, and then we get direct access. So do they get updated every month, or
not necessarily? It depends which creditor it is.
Okay.
It can take 30 to 60 days for it to update. That's why when I see somebody with a phone bill that shows that it's 3 months late, chances are it was 5 months late, and it just took them 3 months to update it.
Got it.
So,
okay.
So normally by that point, it's more than just 1 month late. So, and the lenders know that too, unfortunately. So.
Yes. Oh yeah. Of course. Yeah. So 1, 1, 1, 2, 3.
Yeah. Exactly.
Even 2s now.
Yeah. I mean, for me, it works in my favor because I'm always like, a couple weeks late or whatever.
Yeah.
And that sort of thing. But people who are leaving it for longer, it's definitely not.
Yeah, I've been in a bad credit situation before, so I've seen those 2s and 3s of mine, and
there's also like common names out there too. So one of the things that we see is, people that have similar names, their files get merged with other people's files.
Yeah.
And they could potentially get the problems that.
Well, yeah, because if you have like an uncle and a son and that kind of stuff, and they all have the same name, and then it gets registered to the wrong name, right? The loans, or that can happen,
and it does take a little while to sort that out.
I had it with my cousin.
Yeah.
My cousin came over from Holland, and he stayed with us for a year. Albertus, I'm not sure if you know him.
No.
He came over for a year, and he applied for a credit card. So we have the same doopnaam.
The same
full
name.
Okay.
So in Holland, the names are like a lot of times you have your name and then you have your given name.
Oh, okay.
So that's.
So yeah, my name is Albertus Albert Koekoek, and he had the same.
Oh, okay.
And he's born in the same year as I am.
Oh, okay. I can see where that happened.
He left to Holland, and I tried for 10 times to apply for a new credit card at CIBC. Could not get it. And there was something going on with Equifax, and I had to call him. Couldn't get them. Couldn't get a hold of him, right?
Yeah.
And finally, I just went to BMO.
Yeah.
And they gave me one.
Yeah.
So.
Yeah. Did you ever get that resolved?
Don't think so.
It might still be on your
credit. You might want to check it out.
Oh, yeah?
Yeah, you might. It might still
because it takes a while to resolve.
But I mean, like you go talk to her or.
Yeah, so with us, if there's more than one credit file, I can make a call and they'll merge the files together. But for somebody like a consumer to do it, it would take a lot longer.
Yeah.
And they'd have to sit on the phone all day on hold.
I know. That's why I never figured it out.
Equifax is downtown Toronto. I think it is. I went to the building once just to see it, And there's like a lineup of people there.
Oh,
but I think you're almost better off going there in person than you are waiting on the phone unless you have a direct line.
Yeah, so like any broker who pays for that, they have access to the line.
Okay.
Yeah.
So like I mean, we can't do it unless we're physically like pulling your credit ourselves, but.
So you mentioned Equifax, that's the one I dealt with at that time.
Yeah.
Is that the only one that knows my credit, or how does that work?
No, TransUnion is the second one.
Okay, so they both
pull
the credit reports.
know, but it might be different because not every creditor reports to both of them.
Okay.
So that's why can be these situations where people are applying for mortgages, and somebody might pull up their Equifax report and they might have a $400 loan that's on TransUnion that isn't on Equifax. Unless you ask the client, you wouldn't know about that if you're not pulling both of them.
Yeah.
Because I mean, 99% of brokers only pull one, and banks only pull one.
Yeah.
One or the other, right?
Sense.
So.
Which one do they normally pull, or
usually Equifax.
Okay.
But the insurers pull TransUnion.
Okay.
So it's important to kind of know what you have on both.
Oh, okay.
Yeah.
So.
So CMHC pulls TransUnion?
Yeah.
Okay, so like you can have everything good to go, and then CMHC pulls it and it's like no.
Yeah.
Oh, okay, so that might be.
Normally, there's indication. Like if you're used to reading a credit bureau, you can see certain indications like registrations. On the Equifax one, it just won't show the trade line that's reflecting that, but.
Okay.
You have to look really carefully, right? Like it's not something that.
I just think there's so much education needed around credit scores. There really is. People have no clue.
Right.
And I mean, I have a limited amount of knowledge on it, and I talk to people and they're like, wait, what? They're just so clueless on it.
Yeah.
So I think there's,
And people think that having no credit is better than having bad credit.
No, and that's horrible too.
It's the same.
Yeah.
They want to see 2 years worth of established credit, 2 trade lines.
Because if you have no credit, they don't know. Like they'd be like, well, what?
They don't know
lend this guy money? I don't know what he's gonna do.
Yeah.
Makes sense. Mm-hmm.
So, like normally if we get somebody that has, so say they only have one credit card and they've had it for like 5 years and they have missing payments, that's great. What we can do is they would have to have their own down payment saved, like 5%.
Yeah.
But we would also ask for alternative credit. So like rent receipts. We would see, I basically would look at a bank statement and I would see what else is coming out of their bank, like a gym membership or like they'd want to see some sort of consistency.
Mm-hmm.
If it's a new to Canada person, they want to see rent history, a year's worth of that usually.
From another country wouldn't be.
Well, they can take an international credit bureau too.
Okay.
Yeah, but it's quite costly for those, and it takes a while.
So you can pull credit bureau from like Europe?
Yep.
Okay, cool.
Yeah, not every country has them.
No, but more established countries probably would have them as opposed
so might like Mexico, Cuba, those kind of countries don't have.
Yeah. Okay.
Credit bureaus.
Same in Holland.
Well, they might in Mexico. I don't know. They don't in like Nigeria and stuff like that.
Yeah, I can see that. They come over, like, I need a house. Got to establish some credit first.
Yeah. We're seeing, like, we've had some Syrian clients too. They don't have credit there, and they don't keep their money in banks, most of them.
Oh, no?
Because the belief for some of the religion is that they keep the money to them, like they don't put it anywhere else. Okay. Right?
And some religions, they don't pay interest.
So it's hard. So it's really hard for them to prove credit because they have never had it, right?
Okay.
And they don't generally like to leave it in a Canadian bank because of what their beliefs are, right?
Okay.
So
I actually
it's
didn't
not just Syria. It's like there's a lot of religions.
Yeah, there's some other ones. I know there's other cultures that they don't.
So,
they're not allowed to charge interest.
Yeah. So there are actually mortgages. I can't remember what they're called now, but there are mortgage providers that will do those types of mortgages, and it's basically interest paid up. It's not interest, but a fee.
A fee paid up front, which amounts to interest.
Yeah, exactly. Yeah.
Okay.
So I can't remember what they're called. I've never done one before, but I know they exist.
Okay. I've never ran into that actually, but we're not really we're not too multicultural.
Yeah, exactly.
So we're not in Toronto or something.
Yeah, for sure. So, but I have done a couple of Syrian ones.
Yeah. Well, they're coming to Woodstock too.
They are. So, and we've been able to get them approved. So. Cool.
I know. So what I was asking you was CMHC. They're doing now. I think it was how did that go again? They are borrowing they want to give you the down payment, part of the down payment. They want to lend you the part of the down payment. Yeah. You want to speak a little more to that?
Well, there's not a whole lot to tell because they haven't really finalized everything, so it's a little bit up in the air. What they want to do is they want to give people that have 5% down, they want to pad it for another 10% down to save them some money on their monthly payment.
Okay.
But then like there's some capital gains that come into play when you sell the house and things like that. So so they're still kind of ironing out what that looks like.
Okay, so when the house sells and they get their 10% of the value back or their initial investment back?
Well, they would.
What's their plan? I guess. I know it's still not.
You would have to claim them in your taxes as like a capital gains, the 10% of the increase.
Okay, but then you have to pay them back?
They're not, honestly, they haven't given like a whole, they haven't finalized the details of that yet, so it's probably not something that I can speak about because of the fact that they've basically given a very, very vague outline to the public.
Oh, okay.
And they're, it's election. It's an election year, so obviously.
Yeah, it's going forward by the Liberals, right? So
so they're trying to think of some different things. I mean, if you want to know about some of the things that have happened in the past, I can talk about that. So the stress test, obviously, that happened in 2017.
Just so people don't know, what is the stress test?
So the stress test basically means they had two different phases to it. The first phase was that you had to qualify on the posted rate versus the contract rate. So the posted rate right now, for example, is 5.34.
Okay.
It's based on Bank of Canada posted rate.
Okay.
And then the second phase that was introduced at the beginning of 2018 was that if you were not CMHC insured, you had to qualify on your contract rate plus 2%.
Okay.
Okay, so what that meant to borrowers is that they were able to borrow approximately 20% less than what they could have in the past.
Okay.
So it's just an affordability thing to make sure that people aren't going house poor.
Right, because they were anticipating increases in rates and stuff like that.
Yeah, exactly. It's kind of been difficult in our areas because in Oxford County, the people that are here are not making the amount of money as what they're making other places, and the market is going up so high that we're seeing a lot of the younger generation that are coming into housing having to have their parents co-sign for them, having to put more money down if they can, or borrow money from their parents. And that's making it difficult for buyers to get in.
Yeah, and I've noticed too with real estate, it's a feeding frenzy on the bottom end of it, right? I mean, anything below, in my area, anything below 350 is just multiple offers and multiple offers.
And people are coming from other areas to buy because they can't afford in their own area where the prices are so high because their jobs aren't paying enough for them to qualify, right? So we've had a lot of people that would have qualified. Now they've got to have somebody else go on the deal or pay off some more debt or whatever it is.
Yeah. Cool.
So you have to qualify for a mortgage, but you also have to qualify for insurance.
Correct.
Okay.
Yeah.
And Where does that come from?
So they basically underwrite the borrower based on like their credit score and that criteria.
Okay.
And then when you get a property, they underwrite the property as well. So basically the insurer is going to say, yes, we'll insure this borrower and this property. So what that would mean is that if the borrower defaulted, that the insurer would pay the lender back for the mortgage.
Okay.
So,
and what would happen in person to that person itself? So if I would buy a house, I don't own anything right now.
Right.
If I buy a house, I get a insurance on it for whatever reason. 2 or 3 years in, I cannot pay anymore. Insurance will pay, but I obviously wouldn't be able to stay in that place, would I?
Well, so there's a couple different ways. So the insurers, CMHC and Genworth, they have programs to help people that have had things happen in their life. So, for example, if you've had a layoff of your job, they might defer payments or whatever. There are programs as long as you haven't missed any payments so far. So they have kind of like relief programs.
Yeah.
Because they're not in the business of kicking people out of their house. They would like for them to stay.
They got to find a solution.
Exactly.
Yeah.
And plus, if you leave the house, then the claim is going to be made to them, and they're going to pay the entire mortgage off. So they'd rather give you a temporary solution than pay the entire thing, right?
That makes sense.
If you just stop paying and the lender had to make a claim to CMHC, then CMHC could technically go after you if there's any difference from the sale of the house.
Yeah.
We're not seeing a lot of that now because of what's going on with the market, but when it slowed down, a while back, we would see short sales.
I see. Okay.
Happening.
Yeah.
And that's costing a lot of money.
Yeah, so short
absolutely.
What do you mean by short explain short
Like,
sales.
sorry, it just means that there's not enough proceeds from the legals and the mortgage. So basically there's a shortfall, and then they would basically put a judgment on that person for that money.
Okay.
So in a lot of cases, if you're going to default on your mortgage, you'd end up going bankrupt, because then you can go bankrupt on whatever the short amount is. And then it's very difficult for you to get another house again.
Yeah, so how do bankruptcies affect your credit?
So you need to have, the rule of thumb is 2, 2, and 2. So 2 years discharge from your bankrupt, you can get a mortgage.
Yeah.
You have to have 2 creditors that you're paying. And when I say creditors, we mean like credit cards. We don't mean like car loans or anything.
Cell phone doesn't count either?
No.
Okay.
So it's, it helps definitely, but they like to see credit cards, and the reason why is because you're going to be showing them that you're using credit responsibly, right?
Right.
So if you've got something you have to make a minimum payment on, and it doesn't just come automatically out of your account, then you're showing that you can use that card and pay it off, or use it, and not go over the limit.
But what's your thought on how much you're supposed to use? I've been told that you're not supposed to use more than 70% of your credit.
Yeah, that's right. I usually say 70 to 75. Don't go over that.
Okay.
And if you have a card that you're paying off every month, hold the balance for 1 month just so you can get a rating on it. Because if you're paying it off every month and you're not actually, if you've never carried a balance on it, it's just sitting there, right?
Okay, so hold the balance mean like kind of make the minimum payment and that's it?
Yeah.
And then wait a month and then pay it off?
Because it takes 30 to 60 days for it to report on your credit bureau that you had a balance. So it's, if you're paying it off every month, it's going to look like you've never used it.
Oh, okay.
So
I've actually never done that.
Yeah, so just pay interest for like 1 month, just so that you get it registered.
Cool.
So, yeah.
Yes.
It's a smart move.
Any other questions about credit or anything?
Yeah, so credit score, is that the most important thing when you apply for?
It's one of the most
mortgage?
important things. There's a few different ways. They're also looking at your income, your job history. So it depends how you get paid, if you're salary or if you're self-employed. When you're self-employed, there's a whole bunch of different criteria.
So can that business be taken in? So I'll grab a scenario. I moved to Canada 3 years ago now. I literally worked for half a year.
Okay.
And then I started my own company. First I did photography.
Okay.
Was just self-employed, sole proprietorship. A little bit of video. Then about 2 years ago I started with the marketing, and I went full in on that. So I started with an incorporation. I still live with my parents at that time. Still live with my parents. So I didn't have any cost. Nothing.
Okay.
Like I came to Canada with no money, and still today I have barely any personal cost.
Okay.
So the first 2 years I was able to bring in $50,000 into the business when I started, all my equipment and this and that.
Right.
And then you would have to get a payback from the business to you personally, right?
Yes.
But somehow the accountant said it as a loan. So I wrote out a loan to the company, so the company could buy off the products that I had or the inventory that I had. So the first 2 years made a good profit in the company, but the accountant got to a point that, hey, you got to use that money that you're sitting as a loan that the company still owes you.
Right.
So the last 2 years I made $11,000 in the company on paper.
Okay.
Now the profits for personal, right, that I took out. The company made much more, but on $11,000 I ain't getting a mortgage, right? Right. So what would you suggest to do there?
So you said that you haven't been here for super long. Do you have credits established?
Yeah, 760, something like that. Yeah.
So what you would require is a down payment of 10%.
Okay.
So they have what's called stated income programs. And basically you need to have 10%. 5 can be from your own resources and the other 5 can be gifted. But 10% is what you need.
Okay. Yeah.
And you'd have to, basically what we would do is we would look at your credit and make sure it was good, which it sounds like it is. And then we would state a reasonable income for your profession.
Yeah.
So if, for example, you're making, $100,000 and you're claiming 11,000, we would probably claim something in between. And
it's the last year.
Yeah. So basically, it would just be, we would state your income, and then as long as the numbers work, then you're fine.
Yeah. Okay.
Yeah. There's still some lenders out there that do it.
Yeah.
The big banks aren't doing it right now, but they have in the past. A lot of the lenders that I have that do allow this they're lenders that exclusively deal with brokers.
Okay.
Yeah.
Yeah. Okay.
You wouldn't be able to just walk in and get it. So.
Got it.
Yep.
Interesting.
If you don't qualify on the A side of things, what kind of qualifications are on the B side of things? Like B lenders, what they qualify for, what the rates? I know you can't speak to.
Well, yeah, it depends what the borrower looks like. It depends what the property looks like. So if you're in a larger city center, such as Woodstock, you would need to have 20% down. Okay. And your credit would have to be over 500. Okay. And then basically it would be a rate probably around 5%. Okay. And then there would be a 1 to 2% lending fee, depending on what the credit looks like, depending on how big the mortgage is, that kind of stuff. Okay. Yeah, and then there would be, you need to get an appraisal obviously on the property, and anything that's on well and septic is typically 65% loan to value we can go. Okay, on well and septic you said? Yeah. Okay, and what about in town? Is it still 65? If it's in town, it depends which town it is. Okay. Like if the bigger the city, the closer. Yeah, exactly. So less risk, right? We do have alternative lenders that will go to 80 in a place like Otterville. Okay. But then the rates are substantially higher because they consider it a higher risk, even though the pricing is lower. It's just as you get to a lower price, there's not really much left. Well, the market's less too, right? So the demand would be less. But the way that the lenders look at it is they want to have an equity buffer there. If they have to go power of sale, right? And if it's like a $200,000 house and you've only got a $40,000 equity buffer, that's not very much if there's legal action, right? Exactly. So that's why it's a higher risk, a higher rate. Right? Okay. Interesting. Yeah. Mm-hmm.
Would you ever suggest to anyone to not buy a house, or you would try to get
not buy a house?
So we had this conversation.
Yeah, actually. So yeah, there are people that are meant to be renters and have credit issues, and they continue to have the same credit issues over and over again. Some of the people that are refinancing and getting to these higher interest rate mortgages, they really should be selling their houses, paying off their debt, and they would live so much better because they have so much more cash flow, right? Mm-hmm. If you have a $1,600 mortgage payment, but then you have $2,000 a month in other debt payments, and you have all this equity sitting there, it makes more sense for you to just sell your house, pay off your debt, rent for a couple of years, and then buy something, and it'll be a lot more affordable. Mm-hmm. Yeah, there's older people that are approaching retirement because of all the things that happen in our lives, that we get divorced, we have to split pensions, that kind of stuff. they don't have a lot of equity in their house, but they do have enough that they can pay off some debt. And if they're paying a higher interest rate, it makes more sense for them to just sell the house, pay off the debts, and have a little bit of money in their retirement.
Okay. What about for old people? What about a reverse mortgage?
So we do offer that.
What does that mean? Sorry,
what are my thoughts on it? So a reverse mortgage is we can go up to 55% of the value of the property.
Okay.
And we can basically pull out money at about 5% interest rate, but it's tax free. So if you have a senior citizen and they verify income, but they don't care what you make because you don't have to make any payments on it.
Right.
So basically it just sits on the house and it continues to collect interest. And then when you pass, the estate would pay it off. That's why they only do 55%, and they'll only do that for people over 70 that they go to 55.
Yeah.
So normally, if you're in your, 65 or whatever,
you shouldn't have to worry about that for a while.
No. But it's interesting to learn about.
I personally think it's a good product for somebody who is, they're older and they want to stay in their house, and they maybe have some debt or we've done them for people that, for example, they wanted to get a new roof on their house, they wanted to buy a new car, to have that extra payment, that's a lot, right?
Cash flows
and
can be very tight.
We also work with financial planners that will encourage their clients to take out these reverse mortgages because of the fact that the longer their investments sit, the higher that they can build. And then they don't have to pay tax on it, right? Like until they take it out. On the money, if they're doing it as an annuity, then they can take a salary every year from your house, say $20,000.
Yeah.
I personally would rather my parents have, something to live off of versus giving me the money.
Right.
Doesn't matter to me if I get it.
Mm-hmm. You don't want to pay now.
Yeah, exactly. And then they're not paying the tax, right? So
that's huge.
Definitely. For some people, it is really big, and if they're equity rich but cash poor, it doesn't make sense for them to get a mortgage because they can't make the payments because they have no income, right? So it's a good product for them.
Interesting. Yeah.
So.
How do you as a mortgage broker get paid?
It depends.
That's a question. I asked.
It depends.
That's a good question.
Yeah, so I get it if it's a regular deal that is like somebody who's got good credit, going through CMHC, whatever, the bank pays me. If it's an alternative deal, I do get paid by a lender a very small amount.
Okay.
So normally, depending on the work that's involved, we would charge a small fee and just include that in the mortgage. But I would say 99% of the time we're saving our clients a lot of money. So a small fee of $1,000 or whatever.
That's where the lender fees come into play.
That's my fee.
Yeah.
It's pennies to them because they're saving so much money.
Right.
If they have high interest credit cards and they're putting it all
exactly.
in. And then on private files, so say you were lending your money to him, I would charge a broker fee, strictly a broker fee.
Which could
you wouldn't pay me, he would pay me.
Yeah.
Okay.
So
the lender doesn't pay, the borrower pays.
that's correct. Yeah, and the borrower also pays the lender's legal fees.
Yeah.
So there are quite a few of private institutions that lend out money for mortgages.
There's mortgage investment companies. So basically what they would do is they take an investor like you or me, and they would you'd invest your money in the mortgage investment company, and they would lend it out based on the criteria that they have for their company. Or we have investors that want to be more hands-on, and they say, okay, so now I'm lending your money to him. And you get to see his credit, you get to see his house. You can call him and talk to him, and you can collect his post-dated checks.
Yeah.
So we have some consumer direct lenders.
Got it.
Especially in the smaller areas, like there's we see like farmers that have sold their houses, investing in private mortgages because they've got some money.
Yeah, and some consumer direct lenders probably are more involved than others.
Yeah, for sure. Like I personally, when I've lent money in the past, it's been through mortgage investment companies. It hasn't been like I haven't gotten my hands dirty, and I don't want to know the borrower.
It's understandable. Some people don't mind, but some people don't like that.
Yeah. Mind you, now that I'm in this business, I think I probably would be more involved.
Yeah, that makes sense.
If I was
now you kind of know, now you have a better idea.
Yeah, exactly. But in the past, it's...
if I had money to borrow, I don't know who I'd borrow to first. I think I'd probably go through a broker. Just to feel safer.
For sure, yeah.
But if you,
So, you can make more if you're doing it direct. to your client.
Yeah, exactly.
Makes sense. But the risk is higher.
Yeah, like because you're part of a pool of lenders when you're lending it through a mortgage investment company. Yeah. So you might be investing in 5 or 6 different mortgages. You don't know.
Right. Yeah. If you ever pool some money together, then
exactly.
Yeah. Cool.
So a while ago, so Alex, I was completely against buying houses, like until about maybe like half a year ago.
Okay.
You kind of talked me out of it.
Okay.
You got me to think.
Okay.
Yeah.
So my idea was always, why be $300,000 or $500,000 in debt just for a place to live?
Okay.
Okay. That's just something I found very strange since I grew up. Why? My parents did in Holland. I was like, why? Okay. Anyway, so we had this conversation, and I was like, what if you suggest to buy a house to rent it out, and where you live, you rent?
Sure. Could do that.
Does that make sense? Like, do you ever suggest to do something like that?
We don't see it a lot, but we do see sometimes people in different situations.
Okay.
Especially right now with what the income thresholds are for buying. We might have somebody who only qualifies for, $250,000, but they want to have a certain lifestyle. So they might decide, okay, well, I'm going to pay $2,000 a month in rent. I'm going to buy a $250,000 house, and I'm going to have somebody else pay that mortgage, so I can start building some equity for when I can move to that $400,000 house.
So most of the time when you see it, it's because people want to rent a bigger house than they could actually afford.
Yeah, usually, but
I would do it the other way.
Would you? Okay.
Yeah, I would live for 10 years in a $600 little shed.
Yeah, we see a lot of younger people basically buying rental properties when they're living with their parents, rent free, which I think is really smart, because then by the time that they're ready to purchase, maybe with a spouse or whatever, they can now pull that equity out and they can just start building, right?
Makes sense.
Yeah. Like I wish that more younger people would get into that, because
if I would have known at 18 to buy houses, I know. And back then the rules were so much more relaxed.
I know.
I would have bought a house every year.
I know, and it's weird because
it was probably possible.
In probably then, 15 years, we're gonna say,
the same thing.
Crap! I wish I would have bought more houses when I was younger, right? So.
Yeah, I do know the mortgage criteria just keeps tightening. It does. And it's getting harder, and that's why people are looking towards private money and B lenders and stuff like that too. So
well, that's why it's so important to have someone that has more than one lender access to them, because if we get a no, we go somewhere else.
Yeah, and that's why it's better to go to you than the bank, is what you're saying.
Well, we have access to the banks too, and I'm not anti-bank, and banks have some great products out there.
Okay.
It's just that we know what they offer because we have access to them, right?
Yeah. So, I've heard some scenarios too where the broker gets a better deal than your own bank, and then then you go to your own bank and you say, I'm getting this % from your bank. Yeah. And my broker's giving me a better deal than you are.
Yeah, sometimes. It depends what the volume is that you do.
Okay.
So because we're such a large team, we pool under myself.
Okay.
So it looks like I'm personally doing X amount of million per year, but it's me and my entire team. Right. So we have access to better rates.
Right. So the more volume, the more,
exactly.
More
it's all about volume. For sure.
Okay. Cool.
So.
Yeah. That's awesome. So do you go all across Ontario, or are you fairly?
Yeah. So I'm licensed in Ontario only.
Okay.
But there's certain provinces that you don't have to be, you can co-broker with other agents from, I know agents from all over Canada. Yeah. So if I have somebody, I've done mortgages in Nova Scotia, BC.
Oh wow.
I just basically co-broker with another agent, and then they have their compliance documents for their province, and I have mine, and then we would just arrange it together, the mortgage.
Yeah, makes sense. So how do you get your business?
How do I get it? Well, social media is a big part of our business over the last few years. I also, because I have been in business longer, I have a really large database of clients, so we really nurture the clients that we have. We do get lots of real estate agents that send us business as well. We do have banks that send us business. I have different contacts at the local banks that, if they can't get something done, then they'll pass it along to me. Because at the end of the day, it's more about the client getting the mortgage than who's doing it.
Right.
And then I reciprocate that as well, because every now and then there's a scenario that can get done at the branch and I can't. I have 5 other people looking at my deal, and they've maybe got a product in the branch that we don't have.
Yeah.
So.
Okay.
Yeah.
I'll speak a little more to your social media outreach. You want to speak a little more about that?
Well, we have a lot of fun on it.
Yeah.
So we were talking about earlier how I don't really get policed as much as other industries, as far as when you have a franchise, they normally there is compliance, but there's basically a guideline. As long as we have our licensing guideline stuff in there, we're okay. But we can do a lot of really fun things. We try to do some stuff for the millennials. We try to, have some fun with our advertising. Do a lot of contests. And looking for public feedback on things. We have quite a few people on our social media, so I think that helps.
Where can they find you on social media?
So we're on Facebook. So it's the Mortgage Center, Julie Brenneman.
Yeah.
And we're on Instagram.
Okay.
And we're at the Woodstock Mortgage Center.
Okay.
And we are on Twitter. I cannot think of our handle right now, but we don't do
okay.
we
Well,
don't do
we
a
can
ton
tag
on
it in,
we don't do ton on Twitter.
Yeah, I tend to stay away from Twitter. It's foreign to me. It doesn't really. I think it's for older people, which I'm not the youngest either. But it's,
I have a full-time marketing person.
Okay.
So she works in-house and she does all that stuff. So I really don't.
That's awesome.
What are your thoughts on LinkedIn?
LinkedIn, we did some work on LinkedIn. Definitely have improved our profile.
Yeah.
I find I don't get business from clients there, but I do connect with a lot of different business professionals. Yeah, for sure. Like I don't think I've ever actually gotten a client there, but I've gotten to introduce myself to people.
I'm trying to think. I haven't got a client off LinkedIn either, but same kind of thing. It's a business platform, right? And
but it's really good to have your LinkedIn up to date and with your skills and everything.
Yeah.
And that's because like the amount of times that you can see that a client has creeped you on your LinkedIn before they've called you to see what your qualifications are, and if you don't have it up to date or if you don't have everything listed, then you may not be their first choice, right?
Yeah, I try to go through them every once in a while and comb it and just kind of make it more up to date, more about who I am now. But it happens so fast, right? You don't get back to it for a year and you're like, I'm not doing that anymore.
Oh yeah.
I find that our biggest source of business that when people call me is they find us on Google, because we have a lot of Google reviews.
Okay.
Yeah, so I'm constantly asking happy clients to leave us a review. And I'm trying to get the feedback that way, and that's number one. It's a cheap way to get you to the top of Google.
Yeah. So you do Google AdWords at all? Or?
No.
Okay.
I've never
Any paid advertising on social?
We do like boosted ads.
Okay.
But we Google, like the ratings are our top source.
Okay. Interesting. That's cool.
Like that's I'll always ask
very
people
local,
about
right?
it.
Or does it come out of more places? Like I would assume that all the Google reviews, the clients that you get through there, are people who type in mortgage lender. In this
usually
area,
mortgage broker.
Mortgage broker, right?
Yeah,
and
for
you're
sure.
Show up.
For sure. So, we're always asking for that. I text them a link to fill it out afterwards. So, and the more positive Google reviews you have too, like if you get a negative one, then it offsets it too.
Oh, big time. Mm-hmm.
Because eventually, after you serve thousands and thousands of clients, there's probably going to be one that's not happy, right?
Yeah. So, and you have to review that. Is it Uber, and what's the other one? There's the
Airbnb.
No. There's Uber.
Life.
There's another taxi service like that.
Lyft.
Yeah. So I shared something about Lyft the other day, and they said that if you do anything below a 4-star review, you have to write a review. You can't just give them like a 3-star. You have to give a reason.
Yeah.
And I actually like that, and I wish people would do that too.
Yeah.
Because people can 1-star you just because they don't like you, or just something happens.
Or like they can just be a competitor. That's
exactly. They're gonna 1-star you, and then especially if you don't have a lot of people reviewing you, and you get like 10 reviews and you have 2 1-stars. You don't look good, right?
And always respond to like reviews, like even if they're negative. We have had a negative review. We've had one. And it was a client that we did their income taxes for.
Okay.
Like years ago, I didn't know who they were, and they complained that we didn't have debit in the office. And we do have debit now for taxes, but at that time we didn't.
Yeah.
But it was 2 years later that they made the complaint. And so I called them, I found their file and I called them and I said, if you're unhappy, I'm more than happy to refund your money.
And did they since take it off?
They changed it to a 4-star.
Okay.
And so, I mean,
that's nice though.
That's
good. You have to reach out because that could kill you.
Yeah, and actually when he changed it, he did put the business owner really cares about, what her feedback is. Okay. So,
you just said that you do income tax, so that's another
so we have, I don't personally do it, but we have an income tax preparer in-house. So we offer our clients free tax preparation the year after we do their mortgage.
Okay.
And then we every year it's a discounted rate. So it's just a way that we can keep in touch with our clients. We can know what their financial situation is, if it's changed, if there's something we can help them with. And we do an annual review with that too.
Okay, and then you know if they actually start making more money. You can
afford
something.
Or
that's a really good move.
Or if we have people who are renting, we can say, okay, you're paying $1,600 in rent. Would you like to see what that would get you in a house?
Yeah.
So
that's awesome.
Yeah.
Yeah.
So that's how
I
just started doing income taxes when I first got to Woodstock because I didn't know anybody here. So and I had to pay the rent, so I charged like $25 a return, and now we have a full-time person that does it. So.
Oh wow, that's cool.
Yeah, so it worked out.
So if let's say somebody's paying $1,600 a month rent and they have no down payment. Mm-hmm. What do you suggest to do to get them to a path of home ownership?
Well, it depends. If they have good credit, but they are within a certain income bracket, there are some programs that Oxford County offers, and other counties as well. So basically, they're home ownership programs that you can get money that you for 5% to put down. Okay. It's up to $10,000 in Oxford County. You have to buy a house under a certain amount. I believe it's around $260 now. Okay. And they'll give you that $10,000. And if you stay in the house for 20 years, you don't have to pay it back. But if you stay less than 20 years, then you would have to pay back a portion of it.
So it's like a prorated system.
Yeah, but it gets you your foot in the door of the house. If you make more than what you can for your family threshold, then we also have programs where you can borrow your down payment. So we can help, like if you have to have good credit for these programs, but if you have a good enough income, we can get you a line of credit for your down payment, and then it gets you into a house a lot quicker than renting as well. There's not a lot to rent right now, and the prices are atrocious. So sometimes it will make more sense to do it that way. Yeah. So.
Do you ever get into rent to own?
We do have one program that's kind of in the works right now, but it's a very specialized program. It's for people that are more, they would have to be able to afford considerably more than the average person. So, for example,
because this is rent plus the down payment.
Yeah. So you've got so basically what they charge is fair market rents for the house, and then they have a savings portion as well that goes in like an account to help them with their down payment. But it would be considerably more for. It's more for people that like they really want to get into a house, but they don't qualify for any of the other programs. They have to do some credit repair, but then they don't want to move. Right. Okay. So they're willing to do that. So you
investor to buy their house.
Exactly. Yeah. It's a forced savings plan, basically. Okay. Yeah.
Yeah. Forced saving might be good for me too.
Yeah. It's good for everyone.
That's the nice thing about it. That's one thing. Like you said, you don't want to buy a house. That's one of the things that houses is a little bit of a forced savings. Mm-hmm. So if you're not good with your money, or if you're not awesome with your money, you're making a payment every month, and it's going towards something, right? Yeah. And actually, I was talking to him too about a week ago, and I said, whenever we discussed it, and I was talking that you can own a home and then you have a secured line of credit, so you can actually use the equity that you have to do other things.
Yes.
Right? Mm-hmm. So I don't know if you want to speak about home equity line of credit.
So we have a lender right now with a really good product that is basically, we use it a lot for people who are buying rentals or have 20% to put down because you can only have a line of credit up to a certain amount. So normally it's 65% of the value, but we can go up to 80 if 15% of that is a fixed portion. So basically what we would do is they would do, say for example, an 80% mortgage, and then as they pay that mortgage down, it becomes a line of credit, and then they can borrow against that for any repairs on the house, or they could borrow against that for a down payment on another rental property.
So what you say is the more payments we do, the bigger the line of credit
Exactly,
is. Okay.
exactly. Or you can register it for more than that, and as you build your equity, the line of credit can increase.
Cool.
Yeah. So.
And they can use that for whatever you want. If you want to go to Tahiti or something,
Yeah.
you can use it for that.
I suggest that you just save the money to go to Tahiti, but if you really have to go, you could do it.
You never know.
Yeah.
But it's good that you can take the money out that way.
Yeah, for sure. And you don't have to redo your mortgage to do it.
Yeah.
So.
Cool. All right.
It's awesome.
Well, I think that about wraps it up. I think we got that quite a bit there. Yeah. So.
There was
thanks for having me.
Super interesting episode. I learned a shit ton tonight. I want to reconnect. I want to learn way more about this. Yeah. Thank you guys for listening again to episode number 3 of the Canadian Hustlers podcast, and we'll be back next week with episode number 4.